on to a CNBC TV 18 exclusive. The GST Council is set to meet again on the 10th of January in New Delhi, and sources say that during this meeting, the Council will consider the key proposals pending from its last meeting. And Timsi Jaipuria, she joins us with all the detail. Timsi, what are your sources indicating?
Well, that's right. The next GST Council is all set to meet on January 10 in New Delhi, where the Council is likely to deliberate on the pending agenda items from the last Council meeting that met on December 22nd. What we understand from sources is the fact that the Council will consider the proposal to raise turnover threshold for GST from the current 20 lakhs to 75 lakhs, which is going to be a big boost for the MSME sector. Also, Council is likely to discuss the option of having a composition scheme for small service providers, which will be similar to the ones that exist for the traders right now. The annual revenue limit for the scheme could be between 50 lakh to 1 crore rupees. Also, Council is likely to discuss and decide on the proposal of bringing under construction residential properties in the 5% slab, which is currently taxed at 12%, with a provision of claiming ITC credit. Also, the discussion would be on reducing the rate on cement, that is getting it from 28% down to 18%, which could be another boost for the construction sector. Also, we understand that the GOM headed by Sushil Modi, the Bihar's Deputy CM and Finance Minister, on the proposal of having a revenue mobilization scheme in case of natural calamities and disasters, especially after the Kerala floods. This GOM report has been pending for long, and we understand that the Council will discuss on the final contours being brought down by the GOM on this. Let's see what happens finally on January 10. And yes, not to forget, will it be another rate changing meeting or not is something that we need to wait and watch.
Absolutely, we'll wait and watch. Timsi, thanks so much for joining and giving us all those details. Moving on then, the Reserve Bank of India has constituted an expert committee to identify and propose long-term solutions for economic and financial sustainability of micro, small and medium enterprises. The 8-member committee will be headed by former SEBI chairman, Mr. UK Sinha. Ritu Singh joins us with all those details. Well, Ritu, take us through the structure of the panel and the terms of reference for it.
Well, the Reserve Bank of India has constituted an expert committee on the MSME sector that will identify causes and propose long-term solutions for the economic and financial stability of this sector. It is an 8-member committee that will be headed by the former SEBI chairman, UK Sinha, and will have other members like PK Gupta of SBI, Anup Bagchi of ICICI Bank, Ram Mohan Mishra, Additional Secretary, Development Commissioner for MSME, among other members. This expert committee is expected to submit its report in the next 6 months by the end of June later this year. The terms of reference for this committee really are to review the current institutional framework for the MSME sector and the impact of the recent reforms that were undertaken for this. It will also examine the factors that are affecting the credit flow to MSME, which has been a big topic of debate when it comes to the government and the promotion of more credit to this sector specifically. The committee will also study best global practices that can be implemented, if at all, to the Indian MSME industry and suggest long-term solutions for the stability of the sector. Now, do remember, the MSME industry was hit by the dual shock of demonetization and the implementation of the goods and services tax. And these are some of the measures that the government and the RBI have been talking about to lend some more support to the MSME sector.
Thanks a lot, Ritu, for joining us and giving us all those details. Well, let's move on. The government has tabled in the Lok Sabha an amended bill that makes the use of the Aadhaar number voluntary when it comes to authenticating bank accounts and new mobile SIM cards. Remember, last year, the Supreme Court, in a landmark judgment, had barred private entities from making the Aadhaar number mandatory for KYC purposes. CNBC TV 18 is now in possession of a copy of the Aadhaar Amendment Bill, and Rituparna Bhuyan joins us with all the features of that bill.
Well, there are actually 3 acts which are being amended. Firstly, of course, is the Aadhaar bill. Secondly, you have the Telegraph bill. And thirdly, you have the PMLA bill. Now, what this does is that it gives legal backing to voluntary sharing of your Aadhaar number for availing services like new bank accounts or even SIM cards. That is one. Secondly, it also gives more teeth to the UID authority, through which it can now have or impose a penalty if there is a violation. For example, if any company seeks Aadhaar number mandatorily, then such companies could be penalized up to ₹1 crore by the authority. And if there is an attempt to hack the Aadhaar database, then up to 10 years of imprisonment can be then given to such a person. In addition to that, there is also a clause through which any non-adult person, basically a kid who was enrolled by his or her parents in the Aadhaar system, can opt out of the Aadhaar once he or once that person basically becomes an adult, attains an age of 18 or more. In such cases, such person within 6 months can apply and move out of the Aadhaar net. So these are all the changes which have been proposed. Now it remains to be seen if the government is able to pass it in the next 3 days, the last 3 days of the winter session of Parliament, because opposition parties were not amused. Both TMC and Congress opposed this bill when it was introduced by the government today. With that, it's back to you.